Okay, guys. Sorry. Hello, hello, hello. So we had a very interesting move, just rip in Bitcoin. What a rip. So we broke through the daily one and we made it to my almost to my level. Almost just short of the target. Well, the target's a moving target, so it actually made it to the target. Target's moving higher. These are real volatility levels, so they move dynamically. But that's a 60-minute point range, or is this a day? This must be the daily point range. This is the daily point range. So the 60-minute bar went the daily point range. The 60-minute bar went the daily point range. I'm going to get a screenshot of that. All right. So that is great. I love to see moves like that. That is awesome. So Kraken, my platform, sent a email out, or not an email, excuse me, a Twitter X post and said, "Are you ready for some bullish?" And they weren't kidding. They saw the move first on their platform, and I saw it just as it broke the daily one. So appreciate that, Kraken, for the heads up. Okay. Hit the weeklies. First, I thought it was going to go to the monthly. Um, it hit the weeklies and sort of stalled out. The dealers' call walls come in here automatically. You can see here, hit the weekly one and then bounced. And, you know, I was over here giving you this move when it happened on that bar right there. And also, I was giving you the moves over here and over here. So, it's I know these levels so well that you can go back and check my posts. I was posting on this. Not that it matters. I mean, that's what we're here for, is to give you the support resistance. Um, but yeah, so it went from weekly one to weekly one, and then the dealers come in, squish it back in. But here, the monthly one, right above, within easy reach, and then 11,407 and 11,540 for the 30-day. Or this looks like it's more than a 30-day. What is this? No, it's a monthly. Okay. It's a monthly one close. It's just carried. Hmm. So here's the monthly one right here, this range. So that's the target, 11,540. Excuse me, 11,4,540. So we're already past 110. So 114,540, 114,540. So here's the target, this high, 113,585. What's this candle here? Yeah, 925, 113, 925. Oh, here it is, 114.015. 114.015. Yeah, we can break 114.015. And looky here, this came in at a quarterly one. Look at that. Quarterly one, 90-day one, 90-day one. Open and close. But we can get you to the HFOL 114.540, just above it. No, I guess that's not above it. Yeah, it is. It's just above it. Just above it. All right. So we can get you just above it at our monthly level. And then even above that, we do have another one at 115, 160, 30-day, 30-day one. All right. So, but what a move. So that's, when you need to be, aware of when the market is moving, because you can stay flat and go nowhere for so many months, so many weeks, and all of a sudden a move busts out like that. Look at that. It went the entire daily range in a 30-minute, or excuse, 60-minute period. Very cool. Very cool. And this is the power of Jats PT, because you can get your football field, your playing field right here. So this is the oscillator that gives you the realized volatility as it's happening live. And these levels are dynamic. They do shift. Um, so be careful with that. The flat ranges, the points, um, or the levels are tied to the open and close. So I'm not going to give you my calcs. I have to be careful with how much I'm telling you, but it's just a great system, and it appears that the CME uses the same thing that I do, and the dealer. All right. So the VIX today, disappointed. I didn't get my 3. It sort of disappointed both ways. At first, I was thinking we were going to come back to that big GEX at 17, and that's all contracts. That's just not this week or this month. This is all contracts thrown together. Everybody was on the VIX 17 for every single contract across the board on the VIX. So it was a huge, huge level, shifted down from 20. So it opened down, went to the 2, came back to our 1, and then when it rolled over, I thought we were going to bounce on this one and go back up. Just sort of sit here through lunch and then go back up for the Treasury auction and the Powell. But I was wrong, because our Treasury Secretary did something fantastic, and he got that short-term paper covered. People were all over it, wanting to purchase it, and at an even lower rate. So moving the rates down, and people were still jumping all over it, and very popular. So got the got Powell's repo to not roll over. The money left the repo and went to those bonds. So the mission was accomplished. What I was talking about yesterday, that the point was completely over that guy's head. He was, like, looking at AI and what the AI said, you gurgitated it to him. You have to think outside the box and see the direction that they're trying to move and what they're trying to accomplish. And that's what I kept trying to tell that guy. It had more than just numbers. You have to understand what the mission was, and the mission was accomplished today. They got them into the short-term paper, and those repo contracts did not roll over. They just expired. So the money left the repo and went into the bonds, like I was hypothecating yesterday. It happened. It did it today. What I was talking about yesterday just happened. So I'm pretty happy about that. But I was um, wrong on my 17. I thought it was going to go back to 17. It went all the way down and it didn't hit the three. It bounced very late when we hit the daily three on the ES. So we got stuck here on this ES at 6304.75. And that prevented it from hitting the target. They put the wall up and wouldn't let it go down anymore because they didn't want this to break. They wanted this high to stay. So, but yes, overall, um, not bearish. They've got a firm grasp on everything. Um, Everything looks like it's very bullish, very stable market. So, we've already hit 63. The only problem with this market is going to be this 6-month level that we're running into at 63.60. So 63.60 and 6409.50. That's 6-month threes. And there will be some institutional money sitting on that, defending it. In fact, they may not even want you to touch it. You know what I'm saying? So I was just thinking because they touched these down here in April that we might, get up to the upper ones, to do the complete coast to coast to make it perfect as far as the bell curve. But and we did break this 6304. So this was a key level, this 90-day three, and it is an H fall. So if they can stay above this 90-day three, that's very bullish and will get us to those upper targets. They'll have to move that risk out. We've already broken the 30-day one. Okay. So here's that 63.60 at the monthly one, which gets us to that 6-month 63.60. And then your monthly 30-day two is sitting right above it. So that, protects that quarterly, or excuse me, 6-month 6409.50. 63.96, 6409. So this is going to be the top for July, and it might be the top through September. You know what I mean, Jelly Bean? So we're within 100 points of the market high going through September, and we're in July. So we've got 2 more months. All right. So if I want to do a 2-month distribution, let me show you how easy it is. All right. So I can put a 2-month distribution on top of here and show you what that looks like. So I can do a 60-day. Okay. And let's do a number of trade days. Okay. So you can see that we are at the upper 60-day one right now on the close. And here is the upper 60-day 3, 64.18 for the 2-month. So the end of September 2-month matches my 6-month 3. So there's no way in hell that that's going to break 64.18, 64.02, 64.9 unless you have a really strong bull case. Um, Everybody's singing Kumbaya, everybody getting along, and all the engines are running correctly. Um, Otherwise, we're going to be running into some resistance, and we might get that pullback in the near future, if not like close to now. So what would that look like with a 5% pullback from here? All right, so let's just call this 63.33. That would be 6,016. All the way down here to the weekly threes or the monthly twos, or down here at these quarterly ones. So here's your 200. Is that your? No, that's not the 200. That's the 50. So right here at this 50 crossing back above the 200. So pull back into your moving averages there. That's if they pull it, back now. Which I think, there's a pretty good shot that that could happen. 63.63, like I said, is going to have institutional money sitting there because that's a 6-month level. And I keep looking at my watch. This is July, and this is a brand new quarter, right? The quarter ended June 30th. So we're like 2 weeks into the brand new quarter, and we're almost at the quarterly 3. I mean, the 6-month 3. So we went a long way, like vertical. So it's got to pull back at some point. And here's your 60-day one that the market was trying to sell. So, and this is a 90-day three right here. So, there's a lot of reasons for it stalling out, is what I'm trying to say. So, just be careful. Yes, bullish, but the market doesn't just go vertical straight up. And we just saw it do it in Bitcoin. The equity market's a little bit different than Bitcoin. So you probably had the government or something buying Bitcoin today. Um, Made Mr. Sailor's day, right? All right, so that's it. Crude was flat inside its ones. It just stayed right in my R ball, right in the inside of the inside. Didn't go anywhere, just top to bottom. And gold stayed inside its lane, inside the ones. So, yeah, come back and buy some more Bitcoin tomorrow, Mr. Government. That would be great. All right, or whoever that was. NQ made it to the daily three, and let's change this chart and just take a look and see what the NQ looks like. Oh, yeah, look. Look, 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 look. I got a warning, warning, Will Robinson. Oh my gosh. Let me just reload this. Yes. Oh my God. Yes. Oh, hell yes. Look at this. So, we're at 60-day and 6-month resistance. So, yeah, be careful. You see that? All right. So y'all be careful with that. Very much. All right. So this is why we've slowed down. If they move that, that is going to be giant. You're going to need giant cojones to move that. All right. Sorry. So definitely slowing it down. I forget, I went through this 6-month thing before, and for some reason I dropped the template. So my apologies for that. But there's no reason that was a 6 month two. I mean, a 60-day two, but a 6-month three. That's a three. So you can see how this works. Oops, where did you go? It did go from 3 to 3. So we've met our 3 to 3 right there, and then even the extra. So it already got its coast to coast. And then here, this has been stalling out right here. So a bunch of institutional money sitting on that. You're going to need big cojones to break that. Okay. All right. Calm down. So that'll do it for today. I think we have seen enough. And if that gives you an idea of how to position to go down to 6,000, very good. All right, guys. We'll see you in the morning. Thank you so much. Y'all have a good night.